A survey shows that businesses in China and India are relaxing their credit terms on the back of increasing domestic consumption and improving sentiments, but they're exposing themselves to more risk. The survey was conducted by French trade credit insurer Coface, which polled more than 2,000 companies.
Stiffer competition has prompted some companies in China and India to offer more favorable business terms last year. Coface's survey found that about half of the Chinese companies are now extending their credit terms, while Indian firms are offering more open accounts, up from 10% to 30%. Open accounts are orders that have been made on credit, with an agreement to pay at a later date. And Coface says these arrangements could be risky.
There is a direct correlation between the magnitude of the risk and the duration of the credit terms when it comes to non-payment.
It could expose the companies to greater risk of payment defaults, especially if the economic recovery is derailed by the European debt crisis. Coface says extended payment defaults in China increased by 55% last year, while in India, 95% of businesses had customers who could not pay up. To guard against such risks, observers say there are some basic measures that companies should adopt.
Very often, smaller SMEs do enter into commercial contacts and even commitments without really knowing with whom they are dealing. So the elementary precaution to take is to at least check bank references or take in a credit report on this company.
Experts add that Asia needs to catch up with the risk mitigation tools that are used in Europe. They include credit insurance, a market which is currently worth 6 billion euros. In contrast, credit insurance in Asia only amounted to some 150 million euros. Coface says it could take Asia up to a decade to align with Western standards on risk mitigation.